What's up, everybody? Good morning. Welcome to the stream. Nice and solid today. MHP tap on the nose. This is what you're here for, ladies and gentlemen. How'd y'all like that? Boom to boom. That's it. Super clean. I did it on Nasdaq. So Nasdaq hit MHP. Nasdaq went right up to there. I was watching S&P on the side, so it hit that, just tapped out. Probably gonna wait for market open. It's like Fed fund futures are pricing in 25 basis points. November. Nothing October, I don't think. The reason I'm not in the longer long is because the S&P has an illiquidity pivot. DA33. We all know that it's been sitting there for a while. So remember, your overnight dynamic. I'll show this in just a second. Put them on your chart every night. MHP is a reversal pivot every time. No matter which direction, you always reverse MHP. You don't bet that it breaks. It's rare that it breaks. That was clean. So basically, CPI came out. Market popped, dropped. I grabbed the long right there. Super clean, super easy. I gotta wait for market open to continue to play this. I'd like to see the market open try to drop this somewhere. I don't have any active positions right now. Had it early today. Got to get up for that CPI. In the CPI days, you know how it goes, baby. Welcome to the stream, everybody. For those of you folks on YouTube, where's my camera? Let me turn my camera on. Hey guys. Whee! Pretty simple setup. MHP, always a reversal. Always. Whichever direction you hit it from, you reverse it. So it fell. Did this. Fell. I long from here. X out there. Just because it's pre-market. Just take the first wave. That's it. Let it play. Let it play out. Always to next resistance. Like basically, when scalping volatility like that, don't be overeager. I mean, I don't have my liquidity maps until 9:30, right? So I have to wait till the market opens. But with this data, I just scalp from point to point. Typically, I'll retrace it to any impact line, but we didn't have one. Yeah, I just buy right here. Close right there. It's like right here. $1,022. And so I don't hold a position going into CPI. Never, right? We always talk about that. Never flip a coin by trying to long or short guessing. Data came out pretty good. I will look at the numbers. Let's see. Looks like we got 0.4 year over year. So it's noise, right? The number actually went down, but above the forecast. It's noise at this point. I wouldn't call it like anything other than just expectation. Forecast 2.3, actual 2.4. CPI is currently in decline, and we have, Fed cutting rates, which is good. Good in general. But more importantly, I believe, is the jobless claims numbers. Those are very important. These are closing some stuff down. Let me tabs open here. So just quickly, before the market opens, we'll kind of get a little bit of data here. Initial jobless claims. These are really high. So relatively speaking, well, this is the high in general, but relative to the surroundings, it is. 200,000 is pretty normal for bull markets. You don't normally see your initial jobless claims. There's people getting laid off. And remember, since 2008, we've just been like in a really strong bull market. You have about 200,000 layoffs even over the last decade per week. And this is right on par with that. This is no different. No craziness. But when you do look at data like this, it is the highest week we've had since summer of last year. Whether you think that to be telling sign or not, I think it's still just noise. And the continuing claims, let's kind of see what that looks like. This all comes out on Thursday as well. Continuing claims is a slight little bump there as well. So the jobs market, right? That's the important part. Bigger part of inflation after COVID was always the job stuff. And so more and more people getting laid off and more people having a harder time finding jobs. Anything less than 2 million here is also standard, even in a bull market. The total jobless claims about 2 million is at par. Nothing crazy here. It's returned to normal, right? Like in this era post-COVID, like everybody was getting hired, right? Crazy salaries. And then here people are kind of getting laid off and sitting there. More people that are laid off. There's more workers available for the jobs there are because jolts are coming down, right? So there's more workers available, fewer jobs. Then the idea is that because of that, salaries come down, supply and demand. The salaries come down, inflation comes down even further. This data point suggests inflation is going to come down even further. The Fed said they're going to commit to 100 basis points total for the year. The minute suggested that smaller cuts were more appropriate than another 50 chunk. Yeah. So it looks like that plus the CPI plus the jobs data still showcases the soft landing is in, which is good. So futures are pricing right now. The Fed's going to cut 25 November. What's up, friends on YouTube? Don't forget to smash the like button. Friends on Zoom, go over to YouTube. You know the drill. Give the YouTube channel some love. Gots to do that. What's up, Warriors? Good morning. Pretty solid trade on this one. Wait. You guys know how it goes. Ooh, 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 ooh. Did I get the Excel sheet for position size? Wait, which one? Or are you sending me something, Lucas? What's up, champions? Y'all ready to do this? Mark it up to 12 minutes. Did I get the Excel sheet for position size? You drop for trader funding programs? One that I made? Let's see if I have the trader funding thing. Maybe I moved it to a Google Sheet. Find it. I know, I was looking, I don't remember. I had built it into one of my spreadsheets for the oh, you know what? I probably have an older version. I built into one of the spreadsheets I made for the overnight, and I just kind of put it off to the side. But I moved it somewhere. I don't remember where I moved it. I'm going to ask people in chat, see if they have it. What's up, guys? Welcome everybody here in the Zoom call. How's it going? How's it going? Don't forget to go to YouTube, hit that like button. Maybe leave YouTube running on in the background. We would appreciate that. Watch the show there. Help us keep our numbers strong. Leave a comment in chat. Give us some love. We have to still keep growing on YouTube to support the Zoom call program. Don't forget, like the Zoom calls, support the YouTube to go with it. Everybody. All right, you ready for liquidity maps? Market opens, we get our positions here set up. Five minutes till market opens. What's up, guys? Good morning. Good morning. Good morning. Here. That MHP tap was so good. So good. Like, can't even imagine. How's your trading been, right? Think about like your trading style, how things have been going for you. Could you imagine trying to use like technical indicators or something to forecast little bounces like that? Pivot points. What did you guys do before y'all? What did everybody here use before you started using like our method? Or do you still use other stuff? Maybe go on YouTube real quick. Tell me really quick. I want the community to see this. Like what are some of your favorite techniques that you used? What did you all use before you guys found your way over here? Is there anything else that you've done that's been able to like, okay, the market's dipped really, really heavily on an event, and that's the pivot I want. You know, this isn't using anything other than our hedge pressure technology, right? MHP is always a high volume pivot. So all of our stuff here is predictable high volume pivots. You guys know the drill. MHP 100% of the time without fail is a high volume pivot when you touch it. 100% correct. It is an indicator that never fails to do what it says it does. It is a predictor of trading activity. Worth $1,000 for me today in the live account. So not bad. Use hopes and dreams. I only trade where I know the volume's going to be. That's it. Nobody can predict the direction of the market, but I can predict where traders will be. It's just math. I can predict volume spikes. So can you. So can all of us. Again, I don't make any tall claims. I stream live on YouTube. I always tell people the data is here. Did I ever tell you they have a tool that works 100% of the time? We do. We have a bunch of them actually that work every time. Now, unfortunately, you can't predict the direction of the stock market. That'd be great if you could. If we could, I wouldn't even be doing anything but sleeping in a bed of money. However, nobody can predict the direction of the stock market. That's random. But you can predict where traders are going to fight and make that decision. And then you use your confluence to decide up or down probability. 60% up, 40% up. Pick up your... And the back tests give you that. Let me give you all those numbers with our stuff, but I know where I act every time. Market's floating around during an event. The event does this. I just wait, and I 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 long. Right at the right spot. Wherever that volume comes in, because I know where that volume is going to be. And that's exactly what your membership is for. These pivot points. These are very solid. They're based on options. And pick a target, pick an index, pick an anything. Here's S&Ps. These are calculated at 5:45 Eastern the night before. And our Discord, you can find our overnight dynamic pivots right here. They're soon to be automated in the platform, which is going to be great. In the Discord, we post them every night. Here's the numbers. 58.14 for SPY. 23.34 for Nasdaq. Both of them pivoted exactly on the dot. So what was worth $1,000 for me today? That's a third of a lifetime membership already. From there to there. In 5 minutes. I wouldn't have to do anything else for the rest of the day. I made $1,000. That play gonna run again? Yeah, you play it at MHP every time it touches. Can predict the house insurance will come in Florida. Oh yeah, how's the thing? I haven't been watching the news. How's everything? Is the hurricane landed yet? It's today of the day. Hurricane lands. Salute to my Florida friends. Good luck to you. Ended last night. It's already gone through. Oh. Was it crazy? Was there like a 15-foot storm surge? Now, being through Texas, I'd like to hail myself as a hurricane expert. Us in Florida and Louisiana, that's all we know. We know the drill. We have hurricanes. Oh, I had one this year. Lost power for a week, flooding in the streets. Ours is a Cat 1. We got lucky. But hurricane's no fun. Probably the easiest of all storms. So believe it or not, like a tornado, I would say of all the storms you can have, a tornado is probably the worst thing. The tornado will rip your house to shreds. A hurricane, unless you get the storm surge or whatever, the wind is probably just gonna bang up stuff a little bit. Like, destroy your stuff outside, rip your shingles off your roof. But very rarely, houses down here are designed to be hurricane proof. Very rarely is hurricanes blow a house away. With 130, 140 mile winds, you tend to be okay with that. But it does flood. That's the problem with hurricanes. They flood. And flooding will ruin your house. But usually you lose power for a couple weeks. That's always inconvenient, but that fixes itself. But hurricanes, no joke with the flooding. As you remember, Hurricane Katrina and Hurricane Harvey, the houses were completely covered in water. So if you're along the coast, you might lose your house completely. That's kind of bad. Yeah. Tsunami is probably the worst. Yeah, water is the worst, I would say. When water comes through, probably the worst. Yeah, tsunami is probably worse than a tornado. Well, hopefully everyone in Florida is safe. All you guys are safe out there. When mental market opens, let's go. I think earthquake is probably... This earthquake causes tsunami. It's kind of a mixed bag. The earthquake itself may not be the most damaging part of the whole experience. But natural disasters aren't a joke. Aren't any joke. Never fun. All right, market's open and going crazy. Let's go. Wait for the data to come in for I make any trade plan setups. You guys know the drill. the same every day. Mostly Houston, Galveston get hit with hurricanes in Texas, or do the other cities too? A lot of the other cities do, especially the ones like closer to Mexico. I mean, the whole Gulf of Mexico gets wrecked by hurricanes like all the time from all directions. Mexico gets them coming this way, this way. I mean, it's just, it's probably bad. I'd say that all along the east and southeast coast gets hurricanes a lot. There's a tornado. Did your buddy saw some Florida hurricane? Yeah, we saw some tornadoes here too. One came by my house. This was before the hurricane though. That was crazy. All right, let's get our data. Let's go. Guys, you know the drill. Okay, this is also going to be at MHP. Okay, so Nasdaq MHP dynamic, exactly where bull zone bottom is as well. The resiliences are negative, so we have resistance from there. We're going to see what these white numbers here are below 0. So you're kind of sandwiched in between these two areas right here. I would say bull zone bottom is a support. If we tap it a second time, it's definitely a good long entry. I'd love to take it. The S&P is giving us today. Oh, hell. And the S&P is going to come ruin the party. Okay. So on the S&P side of things, remember, here is the rarer thing. As long as all data is solid for the alerts. Let's look at this really quick. Yeah, data solid. Rare. About a 10% chance, give or take. Taking a bull zone. But remember, we talked about it before. We don't short. Back to bear zone. Open, blue, open for bear long up. So open, blue, open is a pivot. So second head switcher tap is there. There's a trade right there. Anything in the middle. Is the ratio is greater than half. We talked about this yesterday. Middle goes to there. So any long trades inside of here can go up to, this is like yesterday's setup. So we'll probably hit the same setup again today. Let's look at Russell really quick. Oh, no, I'm in Houston. MHP, similar setup. We are bear short up, which unfortunately is not the most bullish of maps, but any break of 216 is a run up to half. And of course, there is resistance pressure all the way to MHP. If you break this, it's bad. So MHP breaks are devastatingly bad. Just be on the alert for that. Do I want to trade Nasdaq though? Which one do I want to touch? I'm gonna take the dip for sure. Only question is, yeah, float down here. So be careful. Be careful today on a move that does this and gets really gross because of the break and floats right here. All honesty, your perfect setup would be that the violence from the event creates some kind of thing. And then you recover off of it. So today, like I said, no, I'm not selling off this market today. Everything's good for bull. The problem is I need a good bull entry to go off of. So let me see if I can find anything decent. Russell pivoting here, but remember, when the Russell pivots, we don't necessarily correlate that with the S&P or the Nasdaq pivoting. They kind of operate independently. Okay. So bull zone on Q is nearby. Now I'm going to take the zone tap, and that'll be it. The thing on SPY is that this hedge pressure tap isn't as strong as the Nasdaq one. So the Nasdaq one is going to be a pretty big floater here. Russell continuing to press lower. Nice journey to monthly. Russell's about to take its tap right there. So Russell pivot, MHP to hedge. There's a high volume pivot on Russell right here. Russell has a long trade here to here. So Russell's a good opportunity from here to here. I grabbed it with an eval. Right here. I just grabbed it right here at the bottom with an eval. I need to put 200 bucks on this just for the day. I don't need a big trade off of it, but I need to log another trading day on this. It's one of those past evals that I just need to like. Come on. Keep going. Keep going. Keep going. Keep going. Being MHP would be a devastating move. So just watch here. I just need to put like 200 bucks on it. I'm waiting to tap this with the funded account. UVXY, this is good for the bull side. VIX crushing at a bear zone resistance. That's good, right? So anytime VIX hits a bear zone pivot, the VIX can likely come down. The market's likely to tighten up. So dips are going to be bought up. As long as VIX doesn't, this isn't press 29 and higher, we're good. Resilience is still negative. Nasdaq is the stronger of the two. SPY, come on. I don't hate what SPY's doing from here. Problem is that I don't have a lot of good confluence here. It'd only be a small tap, and the reward is very small. I do want to at least make an attempt at it. Let the SPY play around a little bit. Let Nasdaq fall a little harder. I might scalp it on Nasdaq today because Nasdaq looks to be the stronger of the two. Nasdaq has the stronger resilience, and Nasdaq has a bull zone bottom. So, like, if this just tries to do something crazy right here, I'm back. I'm on the long. So let's let it do that. This Russell is not for a big play. I just need 200 bucks. That's it. I'm just gonna get it and close it. It makes scribbles. Russell, I need to go to like right there. That's it. Come on, Russell. Come on, Russell. Don't bring my heart, buddy. What's up, friends on YouTube? Don't forget to hit that like button. Give us some love here. Thanks for joining every single morning for CPI. I am taking a tiny little Russell trade here. There it is. There it is. There it is. I see $200. Close it. There we go. Another eval passed. Done. Funded account today up $1,000. As lovely as it is. I just seen that. I just seen that tiny little tap. Big winners today. That's the funded so far. This is just babysitting some evals to pass those. I got a bunch of funded accounts on the side. Or eval accounts on the side, sorry. Working on getting those funded. So we're trading with the new partners, Elite Trader Funding, some friends of ours over at that company. Pretty cool stuff. Rocket Scooter. Code word gives you half price on all your evals, so make sure you take advantage of that. Ooh. All right. Like I said, this is what you're here for. Monthly edge pressure, 100% of the time. Volume spike every time, no matter what. No matter what. Never fails. We're the few people that have a thing that never fails to do what it says it does. It doesn't. Never doesn't do what it says. I personally always reverse it. The probability is very high. The reversal always gives me something. I never bet that we break it. The break chance is rare under certain conditions. The break chance can be, under the best conditions, which we do have, about 80% plus chance that we don't break. That's good odds. So you guys in YouTube, what kind of styles, my question today is, what kind of styles have you used? So before you started, utilizing what it is we do here, what kind of trading styles have you always used? Oh, Nasdaq resilience positive. Good deal. All right, hold on. Nasdaq does look good. Let's watch this. Nasdaq, fingers crossed. Okay, in 1 minute, if this doesn't go down, I'm gonna pop it long. But let's have some fun. But let's micro it so we can step in. S&P resilience is still negative, which isn't the best news in the world. I think that this initial trajectory downward, I'd like to see it try to flush, and I'd like to grab it again if it does. But this is likely to go higher. Res is positive now. Let me delete all the S&P stuff I drew in here. All right, so the rule is positive res. I got micro so I can jump in on this. This is good. This is good right here. That's good to fill the gap. No rational signals leading indicator. I might just take it right now. Some micros. It's like 2 or 3. Problem is S&P isn't wanting to play ball. Micro, so in case it does dump, I can step into it. I'm scaring myself out of it. Give me 2 more minutes. So those folks in YouTube, what styles have you used, especially if you came here and started learning the high volume pivot points are the only thing you really need, I guess. What have you always used, and how has it failed to assist you in whatever your goal was? What was the failure point of stuff that you've used? This is what I want to learn from people. When I started trying to play this game using technical analysis, right out the door, it was a failure. Like mathematically, I just looked at it and go, there's no way this works. This is a bunch of nonsense. Who draws a bunch of lines on a chart, squiggly lines, and they actually help you out? It's you're just taking price and just putting a function on it and taking your data, converting it to another set of data. It's there's no magic in taking an average of something. You're just smoothing it out. So a moving average, how does a moving average apply any additional power? It has no extracurricular data. It takes the data set you got and just modifies it slightly by smoothing it out. And anytime you smooth something out, you always delay it. It's a mathematical understanding. There's no advanced mathematical concepts applied to remove the noise. No fast Fourier transforms or other anything really that you would do to reduce the oscillatory noise in data sets. So like, well, okay, how would you reduce the delay and the noise and all this? No, it's just, you just take fucking math and average it and supposedly give me more power. And I looked at this and people are like, yeah, I know I use moving averages, I use MACDs and stuff. I'm like, maybe volume might help you out, knowing where traders will be, but how does price is random? Like I say, Jim Simons, the world's greatest hedge fund manager, said that price is random. And I agree, he's a mathematician just like me. Is this right here? A little degree right there. It's an engineering degree. I went to school because I'm a math nerd. That's what I studied. I tend to agree with people that say the stock market's random. I believe that wholeheartedly. I believe everything in the stock market's random. It's Brownian motion. It's just random collisions of people buying and selling at random times. I feel like market makers do nothing of reading technical analysis or reading charts. They just look at the statistics of when you're buying and selling and where. That's it. Like people always say like market makers have like a magic wand, right? Like, oh, we're controlling the price. Ooh, we're squeezing your stops. That's a bunch of bullshit. I know people are market makers. Number one. Number two is they're as clueless as we are. You know that? Hold on, let me turn the fan on because I'm starting to get hot. Did you know the market makers are as clueless as you are about the market? I don't know if you knew that. They don't have a magic wand. But no, go type in YouTube if you can. I want the discussion to be on YouTube. They don't have a magic wand that knows, ooh, we know where prices can be. Or we know where PJ's stocks are, Ben's stops are. Let's stop them out. None of that. I don't do any of that. They just look at the statistics and real-time data of where we're buying and selling. There you go. I didn't get that Nasdaq love. Thank God I didn't tap it. So we're hitting that bull zone bottom. That last little flush here. ENQ, let me double check here. We get float. MHP, it's rare to break that. There's a high volume pivot there. 1, 2, 3. I'm touching with micros only, man. On the dip, I'll hit it again right on the float. Like I said, micros only. Velocity break on MHP. You shouldn't break. We're close to float though. You're right on the edge. 88% of days you close above the green line. Let me let it reverse and then try one more time. Then I'll hit it pretty hard. One more red flush candle. Where the hell is SPY at over here? Okay. Monthly maps look solid. Let me bring those up in just a second here. Bar breaking bull zone or QQQ breaking bull zone right on the edge here. Right on the edge here. Like I said, micros. That's the trick. Micros. There's a little velocity here. Waiting. Hit that green line. Come on. Two more. There to there is a scalp. So anyways, I mean, guys, I could fucking do this all day long. I know it's just micros. Close it out. I can fucking do this all day long. Just micros, but still. Let me tell you something, guys. But the 88% rule right here. The real stats. Oh, geez. Jeez Louise. Just a scalp. MHP always a reversal is why I exited. Any questions? You have any questions? Any questions? We good? Zoom call. You guys cool? Today's breaking MHP is not a good thing, right? So it needs to if it recovers, I'm back to long with minis. Let's just be real. Today might not be one of those days where we get a big reversal. Unfortunately, today might be one of those days where we do close down in here, but we'll see. All right, from our cheat sheet, 88% chance, 88% of days close above these green lines. 8% below. 4% on the upper side. The actual stats from the back test. 88% of the time, that green line is going to bounce under all conditions. When this is greater than half, it even goes higher. Probably it's higher. QQMHP is 482.5. Hold on. $234. This is futures MHP, Harold. Futures. So futures has its own calculation. QQQ is 482. So that's a Nasdaq future. So we do the calculation, the overnight, the dynamics. So if you haven't seen the new stuff, basically what I'm telling you guys, if you haven't been to the Zoom calls, everything I'm saying is going to be over your head. We've revamped our entire course series into statistical moves. And so it sounds like you might not have gone through them yet, Harold. So what we did was we went through the last 6 months of data, which is a healthy bull market and bear market all kind of like lumped together, right? Bull and bear selling, months of rallying, kind of good average. And statistically, what we counted was that 88% of days will close inside of these green bands. These are automatically on your chart. 4% of days will break up. 8% of days will break down and close outside of these bands. So 12% chance outside, 88% inside. And if you break one side, this is for you, Garrett, almost 1 out of 3 of those breaks reverse and go the other way. That's huge. So if you break to the downside, 1/3 of the breaks go the other way. So of the 12%, it's not like when the market's down here, I don't continue to short because the probability is it's going to stay in here. But also the probability is if it goes here, only 2/3 of the time does it keep going lower. 1/3 of the time you blow up the other way. It's crazy. How much are the Zoom calls? We made them $19.99 a month, just $1 a day because it's supporting our new development team. We hired more people, and we've revamped all the courses with these probabilities, right? So that you understand the odds. That's it. Let me give you the link. Hold on. Right here. This is added probabilities to liquidity maps. It's modified liquidity maps, so they're different. This is now different. Some of the legs have been removed. Some of them have been added because the probabilities are now higher. We've done the back test. So now we only have the highest probability ones there that we focus on. We remove a lot of the options because we found like an example is some of them have multiple choices you would take. I've removed some of the ones that I don't ever take. Is that support? QQQ support there. Like I said, I just hit it with micros. Big event day. I don't think that today is the day that does this. I don't feel it. I don't feel it in my bones. The S&P is crazy. We don't have any irrational rules, and I'm going to believe resilience more than anything. So right now, that halfway point is the resistance for the day. So today I want to be very over eager to bet that we go further, because res is a leading indicator, and until that number goes positive, this is resistance. So if you're in the middle, here's another rule, right? Market goes from bear zone to the middle. You never bet that it stays in the middle. More often than not, it does end up in there. Rarer case, I'm talking under the perfect conditions. Perfect conditions. It's about a 90%, 10% split. Under normal conditions or abnormal conditions, it's about 60% back down in here. 60, 70% you're down in here. 40% you go elsewhere. But almost roughly 0% you close in the middle if you open in a zone. Another stat. So the rule is when you're in the middle, like now, that DD ratio tells me that it's more likely to go to tap this before it does anything. But if it's floating in the middle, you use this ratio to break the tie. But I don't bet on the rare thing happening. I usually just exit my long to there. So, Garrett, that's a cool stat for you to have, by the way. Yeah, no problem. No problem. This is it. This is it. This is it. Day is over. Ladies and gentlemen, like right here, day is over. If we get lucky and support this just like yesterday, it'd be the same setup as yesterday. Float this all the way to the other band. Is the trade set up with the float, or maybe a couple of micros or something. Bear zone is resistance. After you're one and done, off hedge pressure bounce long. Rich, my man, let's go. So we're in a Zoom call right now. Like, majority of our group is there, so this is even YouTube. We have a Zoom call that we do that's live. The YouTube is delayed by about a minute. The Zoom call is real time. And we made it $20. And we have 2 Zoom calls a day. So the later Zoom call, we're not on YouTube, and we do the teaching on this stuff. So 577 claim on SPY, break run to DD is my trade. If I get it from here, scalps all day long in this range. That's scalp number 1. Let's let it reset a little bit. Oh, that's awesome. I just got a text from a friend. He's a famous trader. Like famous, like one of the most famous traders there is. And he's like, I just saw your ad pop up. We just started rolling ads. We haven't done ads or liquidity map stuff yet. Like ever. And we just started doing it like a couple months ago. So apparently, like, if you're a trader, it's targeting you, and so he was like, I see you. So good. At least my ads are rolling. That's good. That's good to see that YouTube's giving it some playtime. Our camera crew is pretty cool. They're good. Yeah, like I said, resilience is negative. Like, this is what. Was I just saying this? You gotta be careful here. That's the end of the day, end of the long day. You guys are learning, right? Ben, we told. Be very careful. This number needs to be above 0 for this to happen. It's gonna be hard. This is a hard move. This needs to be greater than 0, and it's not greater than 0. It's negative. So this white line is the tiebreaker from here to here and here to here, and as long as your alerts aren't crazy, it's a leading indicator. So like it's saying like right here, I'm not longing for a breakout. I know there's gonna be resistance. It's a fight all day. They're going QQQ hedge for sure. Yeah. There's no short setup here. Everything is long setup. Let's double check VIX though. Problem is, it's probably gonna be choppy like this all day. Remember we talked about VIX bear zone? I mentioned that this morning. Anytime VIX has a resistance, when the market's bullish, you understand that the volatility is going to collapse. That also supported long setups today. Be careful because the liquidity map on VIX is bullish. It's still trying to trade higher. I didn't zoom cut out my feed here. Sorry about that, you guys. Hey, call Matt as always. Do I trail a runner or take the whole thing off? I usually trail a runner on these small probability breaks. So today, example, had I longed SPY and held, I would be holding a runner. The idea that I don't have confluence, I always step down on my position size. So the rule is basically this. And we teach this again in the Zoom calls. Everything has been designed around position sizing. We have 3 conditions: small, medium, and normal. Here are the rules. Okay, and like I said, there's 20. It's just 20 classes now, and they're all different. It's not just teaching a bunch of indicators. It's a cohesive experience. The theory, or the proposed mechanism and the courses, is statistical backtest that is valid. You can't argue with the numbers. And it stated that we did math to prove that if over a 20 trading day period, which is 1 month, if you were able to survive 1 trading month with half of your account left, and at any period of history, you just long the market every day at a random spot. You just picked a random time, you long the market with the appropriate position size. We give you an equation to say this is the size you use. And if your account gets smaller, the size gets smaller. Account gets bigger, size is bigger. And if you targeted only losing half your account in 20 days, with no trading strategy whatsoever, no strategy, no indicators, no anything, you randomly clicked long. And the only thing that you had control over was the size of the position. If by 20 days you had half of your account left, over 20 years, you would become a millionaire. You would make a ton of money with that as your only strategy. That's it. Wake up, pick a random number, long at that random number, a random time, and all you change your position size, you will make money, and all of you will make money. 100% of you will make money, according to the back test of the market. As a matter of fact, 100% of your 401ks make money with the same exact strategy. That's why. It's a long-term strategy. Doesn't necessarily apply to day trading, and you're not going to randomly long the market. But when you start a foundation, you must create a premise, right, to start on. And this course series goes over that premise, is that the stock market is random. You can take random action and still make money, just long. But the thing that matters is your position sizing must be controlled such that on the worst trading months, you're able to recover as the market continues to move. I will give you a very awesome statistic to prove to you that you need to take these classes. If I teach you something that you didn't know in the next 2 sentences I'm going to tell you, I promise in the Zoom call, I will tell you 100 things you didn't know. So I want you to trust me. I teach you this one stat. Okay. Remember, it's all math. It's statistics. We're just looking at the amount of time something happened and counting it up. There's no lie. There's no fluffing the data. There's no moving average. This is what it was. We counted it during the courses. So let me tell you something very cool. Like I said, there's all new graphics, all new liquidity maps, all new everything. Did you know, ladies and gentlemen, did you know? In the stock market, I'll start at the top. Did you know that doesn't matter 2008, 2001, 1984, 1980, whatever, 1987, 2020, up market, down market, doesn't matter. Did you know that over the course of time that 70% of months are green. That's it. Trading months. Did you know that about 30% of months are red? But did you know this? That of your green months, only 20% of them sold a third of their month by the end of the month. Top wicks. This is a data point. I give you hundreds of data points like this. Did you know that of 70% of your green days, only 20% of them sell off a third of the month by the end of the month, meaning that green stays green. Green is strong. Green doesn't sell. Strong, 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 and it keeps going. Okay? But did you know that on red days, that 60% of them recover a third by the end of the month? This is one of 100 things you're going to learn. That's what the courses are all about. I'm giving away one piece of the sauce. Take the Zoom calls. 60% of red months will recover a third of their loss by the end of the month. So if you're randomly longing the market, 60% of the time, you'll gain a third of your account back. And as long as you have half your account still in your pocket, you're going to survive the market because red months don't usually stay red. Even in the worst of red months, if COVID would have lost half your account and then half your account again, you're down to a fourth of your account. And as you continue to randomly long, you've made it all back and then some. So even you would survive COVID with the no strategy trading strategy. You would survive 2001 with the no strategy trading strategy. The most you ever have is 2 really nasty months, but you recover most of them, even on the way down. Wick, 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 wick. As you're losing money, your position size is getting smaller, so your loss is smaller, so that eventually you recover. You could when we actually prove this, you can actually randomly long through this, and you still made money. As long as your position size got smaller and smaller and smaller and smaller and smaller and smaller and smaller as you got lower. You could still do the same strategy over years of recession, and it still works. The no trading strategy. All you have to do is change your position size. That's it. So why do we struggle as traders to do all this extra stuff and still lose money? When really you don't have to do anything at all, but randomly long the market and just change how much you put in. Because we're trying to beat the market. We're trying not to take 2 years of losses to make 10 years of gains, right? So that's kind of like what you're trying not to do as a day trader. So that's why you don't actually take that trading strategy. It's just what we call a baseline, right? But those are statistics that matter to your position making and choice making. Green, here's the logic from that. Green months that are nice and strong, you're not like, oh man, the market's rallied. Let me try to fade this. It's a dumb idea. 20% of months do not fade. Or sorry, 20% of months fade. 80% don't on green months. So it's like, that's the idea that you need to have going into trading. Right? What are the odds of things happening? How often do things happen? Look at this. Are you looking at this and scared of it? Like, oh, okay, this green month is going to somehow turn red, right? Yo, Rich, what's up, man? See you later, bud. So the idea is what we teach you in the classes is that it's not your trading strategy that's making you suck as a trader. It's that you're not betting correctly. So we have 3 philosophies that we teach: small, medium, and large, or normal. And the way you determine those is by you. Normal is your position loss. Say you're trading options and you do 0 days. And normal is when you lose 5 days in a row of this amount, you don't feel sick to your stomach at the end of the week. Like an example, if I were to trade, and you decide what that is to you. If I were to trade, looks like we're going to attempt to make that trade again. So it looks like the long is still in. I don't know if I want to touch it though. I can hit the road in a little bit because I have to go on another trip. My brother's getting married this weekend. I'm gonna head out to Kansas. So example is, if you say, man, if I lose $1,000 in a week, I feel sick to my stomach. So then if I go, well, what about 500? Oh, that's okay. 500 is okay. All right, then your normal is 100 a day. That's your limit. Whatever it is. Whatever your normal per day times 5. You don't feel sick after 5 losing days in a row. Like, you don't feel like, oh my God, my life is over. Oh God, this is horrible. My wife's going to kill me kind of thing. As long as that's your normal. Your normal is you have a bad week and you've lost every day and you still are like, whatever. It's fine. That's your normal. Medium is half of normal. And small is 10 to 20% of normal. And that's basically it. So whenever you're trying to do a long trade, certain one of these liquidity maps are going to have small, normal, medium written on those legs. The rule is as follows. On a long trade, for every confluence piece that you lose, you step down. A normal becomes a medium, medium becomes small. Like if I'm not convinced on the long trade, when I would normally take a medium, I instead take a small, which I did, which you saw me trade micros. It's all system. I'm not doing anything off the cuff here. So my medium trade lost confluence, so I traded it small. Like I was like, what, 5 micros, 4 micros, something like that. On the short trade, however, because 70% of months are green and 80% of those months don't sell off, I don't like to short the market. I rarely ever short the market. As a matter of fact, I almost never short the market. I only short the market under 2 conditions, and we talk about it in Zoom calls too. Any confluence that you lose, you don't step down your position size, you just don't short. It becomes a 0. So if I'm like, I want to short this, but DD ratio is bullish, then no short. I want to short this, but resilience is positive, no short. Any scare, it doesn't matter how big, any scare against my short, I don't take it. I always bet that the market's waiting to jump bullish or become bullish in a moment's notice. I always have that in the back of my mind because the statistics say that is so. So if you were trying to trade and be a profitable trader, you must understand that the market makers and my market making friends, all they look at is statistics. That's all they look at, and probabilities, because they believe the market is random. The world's most famous and successful hedge fund manager also said the same thing, and I'm telling you the same thing. I'm probably the least experienced and successful of all of these people. I just have the engineering degree and years of being that nerdy kid in school with glasses that was the captain of the math club. And that's all I have behind my back. I can tell you mathematically, this shit is random. I can prove it. But statistically, we behave the same way. And your 401ks all behave the same way. They only long the stock market or sell the stock market. They don't short and bet against it. So that is the statistical edge you have. And it's tried and true. It's there for everybody. So why not build off of the foundation? Your moving averages, butterfly patterns, your moving cobra patterns, your elephant pattern, your camel snake walrus pattern, the emojis on your chart from whatever stuff you bought can predict the stock market. When all the most successful professional traders tell you can't predict stock market, stop believing you can. Stop believing you can. Instead, play the statistics. That's it. That's it. And that's what we teach. The Zoom calls will teach you that. What are the statistics of things? If you like that one little shout out about the odds of the monthly candles is one thing you learn, I promise you will learn 100 things you didn't already know, especially if you've been here even for 5 years. Okay. snake walrus pattern. All right, I'll be right back in just a second. I gotta go assist down for the day. Have a great trip for the wedding. Thank you, thank you, thank you. I'm still here, but give me a second. Simon, your Discord access. Let me check it really quick. You're not a Rockstar member, and the Zoom call is losing money, invest money. You ever spend multiple funded accounts for just a few months? I'm glad to hear it, man. Just sitting on this one, waiting for it to do something magical, but nothing seems to be happening. Boring day. We should get a little bit more activity here. We're not getting any love. Nasdaq resilience is positive. Nothing here. I'm not touching this. We should get some momentum today, but nothing yet. I'll be watching it to see if the S&P decides to improve a little bit, but nothing yet. Nothing good yet. Resilience is a tiebreaker at that middle line there. With the S&Ps being negative, it's just going to have a little bit of resistance there. Double checking the market hasn't unusually volatile or anything. VIX is still clean in between the zones. Nasdaq's still kind of looking okay. Yeah, so you can, like the trade here to fill the gap on Nasdaq, not a terrible idea. I got to go in a little bit, hit the road. That's why I can be able to watch it. It's not a terrible idea. The problem is that yeah, not the worst idea in the world. Yeah, if I can't commit to being here, then I usually don't take the trade. I gotta go in a little bit, you guys. I love y'all. See you in the Discord. Stream is over. Not a bad day. $1,135. Tiny little scalp there, and that's basically a tiny little scalp here. Hedge pressure hit it twice. I'll hit it again if it touches again. Days like this that haven't picked up momentum in the first hour, I usually am kind of like, instead of just sitting on a position and like holding my breath for 2 or 3 hours, I'm just watching. Like every time it hits orange, I'm gonna hit it again. Try to overshoot again. If it starts to inch here again, I'll long it for the end of the day close. Just be cautious today if the VIX runs away. You don't want to kind of be in an upside down position if volatility runs away. You have a bear side resistance on the VIX, which is giving you a little bit of comfort that the market's not going to collapse under your feet. This is an illiquidity pocket on the VIX. So what VIX can move quick, so the market can have some sudden drops. But as long as VIX is not moving rapidly through here, then you should be okay. I got a lot of stuff I got to run and do today. I love you guys. We'll see y'all tomorrow. Yo, micros. LO, yeah, exactly. This little tiny scalp on micros. All right, we'll see y'all. See y'all. Can't tomorrow. I won't be here tomorrow, and I won't be here this afternoon. Unfortunately, for the Zoom calls, I'll be driving. So. Yeah, you should call me on the drive. It's a long drive, but unfortunately we can't. We're not gonna be able to fly this one. Remember, volume was the key. Knowing your volume is, knowing your traders are. That is the key. Behaving this random market. If you know where the traders are, at least you know where to make your bets. Up or down is still random, but we have odds and statistics that are helpful. Conditional, statistical, back test proven statistics. That's all it is.